Welcome everyone to the show. I am Max, your host, as usual, on the RHMax channel, where we not only talk about crypto. From time to time, we have a guest on who I'm very excited to talk to. Just met him in the green room, Gautam Baid. Amazing mind of wealth, and I got his book right here, The Joys of Compounding. I dropped the link in the chat. This is something I was telling him too. How many times I went to the coffee shop with this book and just went over a chapter or two, while I'm taking a break and just really soaking in the wealth and the wisdom I've got from it. So great book. Literally the passionate pursuit of lifelong learning fits great within our ecosystem. The Hex PulseChain ecosystem. We're about delayed gratification. We'll get into crypto. I'll ask him a little bit about that towards the end, but I have an interview to do, and I want to introduce him. Gautam Baid, CFA, the founder of Stellar Wealth Partners, an investment firm that specializes in listed Indian equities with a long-term, fundamental, and value-oriented approach. So if you've heard of value investing and all that through Warren Buffett, he talks about a lot of that in the book as well. He's a fund manager at the Stellar Wealth Partners India Fund, a Delaware-based investment partnership available to accredited investors in the U.S., if you're interested. He's also part of the fund manager of the Stellar Wealth PMS, a portfolio management services, which is available to global investors and Indian citizens. Both funds are modeled after original Buffett partnership fee structure. So there you go. Big Warren Buffett fan, I have a feeling. And if you read the book, there's definitely lots of, another thing I love about the book, there's quotes, all these amazing quotes from lots of different people, which really hit each chapter, really just make it fun to read too. He previously served as portfolio manager at Summit Global Investments, an SEC registered investment advisor based in Salt Lake City. Before that, he served in Mumbai, London, and Hong Kong offices of Citigroup and Deutsche Bank as a senior analyst in their investment banking teams. He is, of course, the international best-selling author on value investing, The Joys of Compounding. Again, one of my favorite books. And he is a CFA chart holder and member of the CFA Institute in the USA, an MBA in finance from Nimra University in India, and an MS in finance from ICFAI University in India. Just FYI, Gautam's views and opinions have been published in various forms in print, digital, and social media. In 2018 and 2019, he was profiled in Morningstar's Learn from the Masters series. So fantastic mind. We love to get people on the show who talk about wealth, wisdom, happiness, that sort of thing. I've been on the journey for a few years myself. So we are glad to have Gautam on the show. Welcome to the channel.
Hi, Max. Thank you for inviting me.
Of course. Yeah, it's I mentioned the green room too. It's just this book is one that when I read it, it just really struck me as, man, this guy he figured a lot of stuff I'm learning right now. He's figured a lot of it out. And I just saw so many parallels and connections through what I've been going through the last few years, learning about traditional finance and also applying that into crypto and DeFi, about how I do investment strategies and wealth creation. And I love the quotes you put throughout the book. Just nuggets of wisdom. That's something I try to find on YouTube as well. I try to subscribe to people who are talking or quoting or analyzing different bits of just good stuff that you can learn from and just be a better investor, be a better person. And I love that you bring that out in a lot of the works, especially this book that I'm so in love with. Just about it really is one of my favorite works.
Thank you for the kind words, Max. I'm glad you found it a good read.
Yeah, of course. So I gave a little bit about your about who you are, but you want to tell us just a little bit about your background in investing, wealth creation, your journey you've had throughout your life?
Sure. So I was born and brought up in India, and ever since my early teenage years, I had a very keen interest in entrepreneurship, especially by the fact that once a solid foundation is established for a business, the owners do not work for money, rather money works for them. So having done my graduation with a specialization in accountancy, pursuing higher studies in the field of finance seemed like a natural extension. So I did my MS in finance from ICFAI University, Hyderabad, India, and I also did my MBA in finance from Nirma University in Ahmedabad, India. And after completing my MBA, I got a campus placement with Citibank, where I worked as an analyst in their investment banking team for 3 years. And after that, I worked at Deutsche Bank as a senior analyst for 4 years at their London, Mumbai, and Hong Kong offices. As regards how did I get my start in the field of investing, as is typically the story of most investors in the stock market, I was attracted to the stock markets during the final euphoric phases of a very big bull market. In my case, it was the 2003 to 2007 bull market in India. I still remember I purchased a mutual fund named Reliance Power Sector Mutual Fund in late 2007 and a stock named Ispat Steel in early 2008, because both of these belong to the hot and fancied sectors of power and steel at the time. And both these investments had gone up very sharply at the time of me making my investment. So I just extrapolated the recent price trends in them without paying any attention whatsoever to their valuations or underlying business models. And I eventually paid the price. Both those investments crashed 70 to 80% over the first 12 months of my purchase. And I'd successfully gained my admission into the stock market by paying my tuition fees. Despite the bad initial experience, my interest and enthusiasm about the stock markets remained very high. And after working for 7 years in the field of investment banking, one fine day I came to the realization that, hey, I just have this one short life to live my dream, and I do not want to work for something any longer in which I do not have a very keen interest. I was so keen to get a job that I relocated to the US in 2015, thinking that since I'm a CFA charter holder, I should easily land a stock market job because the CFA charter is highly valued in the investment management industry. But life is not a bed of roses for those trying to carve their own destiny. I was rejected in the first 3 stock market job interviews in the first 6 months of coming to the US. At the same time, I ran out of whatever little money I brought with me from India, and to take care of my living expenses in the US, I did not want to sell a single stock from my portfolio of Indian equities because I did not want to interrupt the process of compounding. So I took up a minimum wage job as a front desk clerk at a hotel in San Francisco, where I worked for 15 months in the graveyard shift. Now, for those of you who don't know what the graveyard shift means, it was a shift which ran from 11 p.m. at night to 7 a.m. in the morning. And even though it was a big struggle for me intellectually, culturally, physically, emotionally, mentally, but today in hindsight, I highly value those days of my life because for the first time since the beginning of my busy investment banking career, I finally got some free time for myself to read and learn. The pace of work from the late night to early hours at the hotel was pretty slow, and I made full use of the free time to read every single blog post published on investing on blogs like Safal Niveshak, Jana WordPress, Basic Investing, Microcap Club, among others. And the passionate pursuit of lifelong learning had finally begun. Now, here I would like to take a moment to share with you the power of passion. I remember every single night for those 15 months, I used to apply to a minimum of 3 stock market jobs online. And as you know, every time we take out time to fill out the job application, and attach a resume, and every single time we click the submit button, there is so much hope attached behind every single submission. Over those 15 months, if you just do the basic math, I had applied to more than 1,300 stock market jobs in the US, but I did not get an interview call for even a single one of them. To face rejections more than 1,300 times and still keep on going is only and only possible if you're absolutely resilient and dedicated about what you want to do in life. Now, luck, chance, serendipity, and randomness have always played a big role in various parts of my life till date. In November 2016, during one fine night at the hotel, while doing my regular routine daily job search online, I came across a job profile on LinkedIn, and I just clicked on the quick apply button, just out of merry hope, basically. And wonder of wonders, I was shortlisted for the interview, and that too for a senior role in an investment firm, even though I had zero formal stock market work experience. And this was the phase in my life in which I was about to realize the power of compounding knowledge in action. You see, all those hundreds of hours which I'd spent over the previous 15 months at the hotel reading all those blog articles had now established a very strong intellectual foundation for me in investing. And this time I was able to ace all the 3 rounds of my stock market job interview. Basically, body language derives from confidence, and confidence in turn derives from knowledge. This is why, having very sound knowledge of a field in which you're very interested in is so important. And the great thing was that, I got my dream job, and I never expected to become a portfolio manager straight away. I was expecting to join as a junior analyst, then get promoted to analyst, then to senior analyst, then to assistant portfolio manager, and then maybe reach the designation of portfolio manager after 12, 15 years. But here, this is how compounding works. Compounding bestows its magic and benefits upon you only after testing your patience and conviction to the fullest. Had I not gone through that ordeal of getting rejected more than 1,300 times, I would have easily given up, right? But like Thomas Edison has said, most of life's big failures are people who did not realize just how close they were to success before they gave up. So never give up. The key is not to give up ever, because you never know when you're going to make it big. The key is to just keep on going. That is the key to compounding. You just have to keep on going. You have to give it time. That is basically how compounding works. So I worked as a portfolio manager of global equity strategy for 4.5 years. And in July 2021, after having gained a lot of exposure as a portfolio manager, I decided to venture out on my own and set up my own India-focused equity fund in the US for investors in this country in order to bring the big India opportunity to all of them.
And it's an amazing story, perseverance. This coming here, and I really feel like this is timely because you're preaching to the choir about delayed gratification, compounding. Air community is just all. I mean, we're kind of in the middle. Well, hopefully we're towards the end. Hopefully, of a brutal bear market, especially in crypto. And there's a lot of people who are not here anymore. They were here last year, the year before, and they're just like, they just came here for the quick gains, to get rich quick, all that stuff. But the people who our founder, I've been following our founder Richard Hart for 6 years now, and he talked a lot about these values and principles and just hanging in there. If you invest in a good product, you have to believe in it. You have to be convicted and stick with it, no matter the blood in the streets, all that stuff. So I really feel like you saying that it's just talking about compounding, and there's a lot of the same values we hold in the ecosystem, and we've been going through it for 18 months or something now. So it's just when you say that, I feel like you're talking about air crypto community in this bear market, because it's been a rough one, but a lot of us are still hanging in there because we believe it's coming back. So fantastic story, Gautam. Amazing.
Thank you.
Yeah, and speaking of the bear market too, the fall of 2021, October, November, somewhere through there, we've been in the bear market for a while now. How long do you think it'll last? Do you feel like we're closer to the end or than the beginning, or where do you think we're at right now?
The answer lies in the interest rate cycle, because interest rates act as the force of gravity for valuation of any financial asset in the world. Just to give you some statistics from history, from March 2000 to 2013, for 13 long years, the NASDAQ gave zero returns over 13 long years. Similarly, from December 1964 to December 1981, the Dow Jones Industrial Average went from 874 to 875, one single point move in 17 years. So you have got both the Dow and the NASDAQ having gone through time correction for more than 17 years and 13 years respectively. And this is why it's best to focus on bottom-up stock opportunities, focus on individual opportunities, because there is always a bull market going on somewhere in the world at all points of time. This is a universal truth. Even in the worst of times, like 2020 March COVID-19 market crash across the world, there was a bull market. And where was that? It was in US treasuries. So during every time in the world, you'll have a bull run in some asset class. You just have to have the alertness to identify it.
Do you think there are, for the markets, as far as, traditional markets, treasury markets, international versus US, crypto, is the interest rates, is that key to everything, or is there decorrelation between the different ones and different signals you can read, or is it just kind of the general way of thinking about it?
In my view, all the risky asset classes, including crypto, are a very levered bet on the liquidity market cycle. So basically, market cycle is nothing but the liquidity cycle. Stanley Druckenmiller, one of the greatest traders of our time, he has earned more than 30% CAGR over 30 years just by tracking the liquidity, nothing else. So I personally believe if you track the liquidity, you can do very well, and basically positioning your portfolio for optimum success. So you have to be alert and also position your portfolios accordingly. There is a great book on this topic by RHMax. It's called Mastering the Market Cycle: How to Get the Odds on Your Side. Highly recommended reading for all investors across all asset classes, stocks, bonds, and crypto.
Yeah, fantastic book. That is a great book. So if I guess too, how investing in a bull market versus investing in a bear market, looking at 2023, assuming we'll be in the bear for at least a little while longer, how would you approach investing in this market cycle?
So it's very simple. So during bear markets, earnings growth dries up across sectors, and the market becomes very narrow. So you just have to be with stocks with good earnings visibility. That is the only protection which you have at your disposal in a bear market. Just don't try to be too brave. There is no points for bravery in the field of investing. Just have to be realistic and practical, and be with the strongest stocks in the market where you have got earnings growth visibility. Bear markets are not the time to be in stocks with headwinds, because markets tend to overshoot both on the upside as well as the downside. And if a particular group of stocks were the leaders of the previous bull market, you can be rest assured that they'll be the leaders on the way down as well. The leaders of the previous bull market fall the hardest in every subsequent bear market. This is what history teaches us. It always happens. And what a common mistake investors do is, many investors who basically felt left out in the previous bull market from those stocks, from the bull market leader stocks, when those very stocks start crashing down, suddenly these investors start thinking that they are getting a bargain. But no, these stocks are falling for a good reason, because the fundamentals are deteriorating. So new leadership, new emerging themes and sectors always emerge from the depths of a bear market. And that is why you want to look for pockets of relative strength in the market. Let the market guide you and tell you where to look. And then you do your own independent research and study on those businesses to see if their future prospects are actually very, very good. Because the collective wisdom of the market is far, far greater than you or me or any one individual.
Yep. Yeah, it's an amazing time to be alive and just to see all the stuff we've been through the last 3 years, as far as the printing of money and just now the interest rates, and just I feel like some people. I was watching the All In podcast. I don't know if you watched that one with Chamath Palm. I can't pronounce the last name. Chamath and a bunch of investors, and then they were talking about whipsaw and this year and what could happen. So it's going to be interesting. I think 2023 and 2024, hopefully we'll see a light at the end of the tunnel. But definitely the way the market went up, it's bound to come back to reality sometime. And if the economy is not good, it may reach further than you think it will. So I want to talk about your book too. Again, I'll just throw it up there for people who just tuned in. The Joys of Compound. Oh, no, where are we at? There we go. There. Green screen. Come on. There we go. Green screen. So The Joys of Compounding. So again, great book. I've dropped the link where you can buy it on Amazon in the chat. I wanted to ask, what made you decide to write it, and maybe you can go through just some of, who is it for? What are the benefits, and then delayed gratification, one of the principles you talk about, as well as compounding, of course, in the book. Something, again, a pillar of our community. Delayed gratification, wait and you'll be rewarded type of deal. Tell us about the book and your motivations.
Sure. So there's a very interesting story, as is the case with most people. So, let me just share the story behind how the book came into being. So I joined Twitter in November 2016, and I just started microblogging immediately about, whatever I was reading, whatever I was studying, whatever I was thinking. I was tweeting on psychology, history, mathematics, investing, business, economics, etc. And within a few months of me joining Twitter, 2 individuals from India flew all the way over to Salt Lake City, Utah, where I used to live before. They came just to meet me and thank me for the content and the thoughts which I was sharing on Twitter. And they were the ones who recommended to me the idea of, why don't you simply organize all your thoughts and writings into a book format. So for many years, I had a habit of maintaining a documented archive of all the good articles and books that I'm reading and my learnings from them. So I thought, okay, I've benefited a lot from the investing community. So this is a great way to give back to everyone. Let me self-publish a book on my own. So the first edition of The Joys of Compounding was basically a self-published effort. and I sold it for zero royalty. I did not charge anything to cover the costs of marketing, production, distribution, or logistics. It was simply a way of me to give back to others. But what I've realized in life, Max, is that when you help others unconditionally, the universe works in such a way so as to come back and reward you back multiple times over. And the same happened with me as well. During the May 2019 Berkshire Hathaway meeting weekend, I was at the book signing event at Creighton University, Omaha, and Miles Thompson from Columbia University Press came over to meet me, and he offered me a publishing contract with Columbia University Press. And it was like a dream come true for me, because being a value investor, it was always a dream for us to write a book with Columbia someday, because that is the place where value investing originated. Benjamin Graham started teaching about value investing in Columbia itself. So it was like a dream come true for me. And the rest is history. The Joys of Compounding went on to become an international bestseller in 5 countries across the world. And so that was how the book basically came into being initially, and then later how it got published by Columbia. Now coming back to how the book benefits and who does the book benefit. So the learnings discussed throughout the book power the lifelong compounding journey of a value investor. At the same time, the learnings are not restricted to only about investing. This is because compounding does not apply only to money. Social and intellectual capital also compound, and investing in yourself, in your relationships, and in your understanding of the world pays massive dividends over time. All the great things in life come from compounding, and that is when the book I've written about compounding positive thoughts, compounding good habits, compounding good health, compounding knowledge, compounding wealth, and compounding goodwill. So all these aspects are covered, and this is a book for people from across different fields of life. Finally, about delayed gratification, there's a chapter in the book titled "This Key to Success in Life is Delayed Gratification." And why do I say that? Which is the variable in the compound interest equation which lies in the exponent n, time. If you want to position yourself on the exponential part of the compounding curve, you have to let time do all the heavy lifting for you. All that you need to do is be directionally correct and just keep at it. And then you'll be surprised and amazed with what compounding can do for you. All that you need to do is just be directionally correct, and then let time do its magic. So, today in the world of instant coffee, instant noodles, instant everything, when people are just craving for instant gratification, being able to delay gratification for a certain period of time is a big competitive advantage to have. And this competitive advantage applies to many things in life, including investing.
Absolutely. I mean, I've it's what I try to say a lot on the show, and especially when we have like health, wealth, wisdom, mindset type conversations. It's just delayed gratification. I mean, I think you get along really well with Richard Hart, the founder of a lot of the products we like. He talks about it too. Directionally wise. When you said that, I was like, yeah, that's one of the things he says. If you buy a bad product, you're that's the bad direction, right? Like that, you're not going to compound well. You're going to compound down. If you do, you can compound in both directions. So if you buy the right product, you're going to compound in the right direction. Otherwise, it's going to be opposite. So
here I would like to add, time is your friend with good businesses and good asset classes, and it's your enemy with bad ones. So just be with the good things in life, and then watch the magic of time.
Yes. Your book is for everyone who's in a discipline or cares about being a better version of themselves or wants to compound in the right direction. Just those principles. You can put them in wealth creation. You can put them in science. You can put them at home. You can just be, you can be a stay-at-home parent and benefit from compounding in the right direction and understanding the benefits of that. So that's why it's, I've read a lot of wealth creation books. I've read a lot of self-development type stuff. And I really feel like your book is the one that just really spoke to me. I was like, whoa, this guy, he not only in wealth creation, he knows how to live a better life than a lot of people. And I took that away from it by far. So we talked about the book, and then, the Buffett quote. I want to go over this Buffett quote too. The single most important decision in evaluating a business is pricing power. If you've got the power to raise prices without losing business to a competitor, you've got a very good business. And then how can investors find businesses with pricing power in the market?
Two simple steps. Look for companies that have increased their gross margins over the last 12 months in such an inflationary period. That's a great place to start because high gross margins often indicate pricing power with customers. The second place to look for to identify pricing power is terms of trade. So if a company has got strong bargaining power with its supplier or customers, it will reflect in its working capital cycle. And companies with negative working capital cycle are a great place to look for identifying companies with pricing power. So terms of trade and gross margins. Just look at these two things. And also, if a company is able to get advances from customers, that's also a very good way to identify companies with pricing power, because otherwise how will a company get advances from its customers unless it has got a great demand pull for its products. So demand pull is a precursor to pricing power.
Demand pull, absolutely. And another concept I want to talk about too is margin of safety. So as a value investor, can you explain margin of safety and like how investors should think about it when they're in the market?
Margin of safety simply means that you're buying a stock or an asset for less than what it is worth. And you don't need to do an elaborate discounted cash flow on a spreadsheet to arrive at margin of safety. If you're having to carry out an Excel calculation to figure out whether an investment is good or bad, then basically it's best to be avoided. The best investments tend to be no-brainers. Basically, it is like love at first sight. You just see it and and you just get it. Okay, this is it. This is the business I want to own right away. So you won't have to do any complex mathematical calculations in order to identify a business with a good margin of safety. Also, focus on drivers of terminal value, because for any stock, 70 to 80% of the intrinsic value lies in the terminal value, whereas just 20% lies in the initial 5-10 years of the business. So if you can figure out drivers of terminal value, then you will be able to identify the drivers of valuation re-rating and valuation de-rating. So you have to constantly check whether the underlying business is getting disrupted or eroded because of technology disruption. So look for drivers of terminal value, look for the underlying business quality, also look for quality of business and management, because that will also drive the margin of safety in a business. There are two ways to invest basically. You can engage in mean reversion and invest in the cheaply valued cyclical cigar butt businesses or low quality businesses, hoping that they come back to fair value, but then you have to sell them and then again find a new opportunity. But if you can identify a high quality secular compounder, long compounding machine, then life becomes much more peaceful for you as an investor. The right time to buy those compounding machines is during a widespread market sell-off, because in a market crash, both high quality and low quality fall together. That is the time to course correct your portfolio and make your portfolio stronger by disposing of the weaker businesses at a loss if necessary, and deploying the proceeds into your high quality holdings. So this is basically how you need to think about margin of safety and how it also helps you in portfolio construction.
Fantastic. Yeah, super important concept. And I love how, there's a lot of people that come into our community and crypto and they don't have a traditional finance background, but some of them do. And they're able to educate a lot of people on, topics such as margin of safety and just the different value investing techniques and the growth stocks and all that. So definitely stuff you really need to learn and at least have a common knowledge of before you get into any industry for investing. I want to ask you too, can anybody become rich? Because that's what a lot of people, especially in crypto, they're looking for a way. Now, whether it's in 6 months or whether it's 5 years, there's various degrees of people who are willing to wait or invest in products. But is there things that people can do to shift their mindset towards wealth creation and away from working for a paycheck? Is that some way that they can be financially free? Something we really value here.
It is very much possible. If you adhere to this quote for the remaining of your lifetime, the best investment you can make is an investment in yourself. There is no other investment which is much more productive and profitable over the long run. So invest in yourself constantly. And in today's digital age, no one can stop you from becoming rich if you really apply yourself. All that you need to do is find a way to create a lot of value for a specific audience group, and then we create digital assets or digital products to cater to that particular audience. You basically want to break the link between your input of an effort and your income, because that is how you achieve financial independence. You want to own income producing assets that work 24/7 for you, and the only way to do that is to have some kind of an online business or a digital asset. So that's one part. But here I would like to emphasize that in the initial part of your career, focus on your job, focus on building your income, focus on building up your personal wealth and savings, because in the stock market, you need chips to play this game, right? And the chips in this game are basically capital money. So unless you have the chips to bet, how will you bet in the first place? So focus on your career first and portfolio building later. But once you have built up a sufficient level of savings and you're ready to take a bit of risk, that is the time you can basically start looking at income producing assets or setting up your own business. And you basically basically break away from working for others and exchanging your efforts for money. So basically that is the broad path which I would recommend to people.
Is that would you consider that one of your highest callings, or highest calling somebody could do is breaking away from the industrial age and maybe the world becomes less productive if everyone does this. So if you're you're in the 1% of people who can figure out how to do it and want it, then you can have it. But like, is that, for me at least, it feels like that is one of my highest callings, is I don't want to work for someone else. I want to own my own time. I want to be financially free. I want to make those steps and be proud of that work and just create and do things and still create value, just based on the things I'm interested in versus what someone's paying me to do.
Exactly. You put it very well. The rich have money, but the wealthy have got control over their time. And there is a Japanese concept which I've talked about in my book. It's called ikigai. Basically, it's a intersection of your passion, your vocation, and your profession. Basically, what the world needs, what you're good at, and what you can get paid for. When all these three things converge, you basically found your calling in life. And what better way to live life than to do something which you love every day and add value to people and get paid for it. And this is, once you reach that stage, once you reach that state in life, you will start looking forward to your Monday mornings more than your Friday evening. And then you know that you are living a great life then.
Yeah. Or will you even know the weekends exist and the weekdays? Everything will just be, a good day.
True.
Yeah. That's something that I must ask too, because a lot of things you say remind me of Naval Ravikant. A huge fan of him as well, and a lot of his wealth and wisdom, and of course, a famous angel investor in Silicon Valley. And I've consumed as much content as I can from him and you as well. But have you ever met Naval by chance? Do you follow his work or anything?
I've read the book, The Almanac Naval Ravikant, but I haven't talked to him personally yet. But yes, I've benefited a lot from his wisdom, especially this point about creating digital assets and having a code on the internet which is working 24/7 for you and making money for you. I think that was a breakthrough aha moment for me. And definitely it is something which all of us should aspire to do over time, because see, our time is limited. Warren Buffett and Jeff Bezos, they may be some of the richest people in the world, but even they cannot buy time. Time is the most scarce resource on this planet because of its non-renewability. So you can have as much money as you want, but you cannot buy back time. And all of us have got the same 24 hours every day, nothing more, nothing less. So you want to gain control of your time as soon as possible in life, because life is very fleeting and life is short, and you really want to make the most of this short time on this planet while you're alive.
Yeah, we all have 24 hours, but we all can choose how we use them, and how we use them can compound in the right direction or not compound at all. At best, could compound in the wrong direction, as I mentioned earlier as well. Let's talk about Stellar Wealth Partners. So you follow an investment philosophy of variant perception and the long-term structural trends, if I understand correctly. Can you elaborate on what those frameworks are?
So let me talk about variant perception first. Variant perception refers to situations where you get return on capital employed expansion coupled with earnings growth. As a result, you get valuation re-rating and you end up with multi-bagger stocks. And variant perception comes from having a differentiated view on the short to medium term trajectory of a business. And there are multiple triggers for variant perception, including Number one, product mix change, which can lead to margin expansion. Number two, deleveraging, because debt is a part of capital employed, and as debt goes down, your return on capital goes up. Number three, operating leverage, which can come from having high unutilized capacity just at the beginning of an industry upcycle. Number four, industry cycle shift. In many of these cyclical industries, the moment the industry cycle turns for the better, that is the time to enter those stocks. You can make multi-bagger returns there. Number five, regulatory change. Government Government's regulatory changes can disproportionately benefit some industries and companies and harm others. So you need to be positioned on the right side of regulatory change. Number six, improvement in asset turns. You can get this information from management on conference calls, and you can get an idea about the fixed asset turnover ratio on the new fixed asset capacity. And along with these 6 points, corporate actions like spin-offs, merger arbitrage, promoter or management change, and divestiture of a loss-making or non-core business segment are additional triggers for varying perception. Now, let me talk about long-term structural trends. Long-term structural trends are found in industries with a very favorable structure. They're organized like a monopoly or a duopoly or an oligopoly at best. They are characterized by consistency and predictability of cash flows, and they have visibility for many years ahead. They are also characterized by value migration. So in India, the market in which I specialize, for the last 20 years, we have had a value migration from offline to online, public to private, unorganized to organized. And there are multiple structural growth plays in the Indian stock market today, including contract research and manufacturing services, electronics manufacturing sourcing, specialty chemicals with critical application, affordable housing, fintech, financialization of savings, branded discretionary consumption, digital transformation, cloud computing. Multiple mega trends are in place, and a portfolio well constructed is one which is comprised of mega trends which provide for long term compounding and shorter term tactical opportunities based on varying perception. So, bulk of the portfolio is in long term structural trends with 20-30% of the portfolio in varying perception plays to generate that alpha. So, this is these two structural pillars of the investment philosophy at Stella Wealth Partners are what drive my everyday actions as the fund manager.
Wow. Yeah, I'm just surprised you must have such a in order to write this book, take those off the top of your head. I mean, you're probably working a lot too, but just being able to come up with these methods and ways of investing and really just provide value to the world. I'm just constantly impressed by folks such as yourself who are just able to really be successful in the areas, because it's hard. It's if it was easy, everyone would be doing it, but not many people are. So very, very interesting. I want to ask too, what are some rules of thumb that an investor needs to keep in mind when entering a stock that's already trading at a high PE?
So see, the P ratio, the price to earnings ratio in isolation tells you nothing about the quality of the business, the capital intensity, the management quality, the competitive advantage, or the cash flow generation. Or it is the price to earnings ratio. It is the current stock price divided by 1 year of earnings per share. But 1 year of earnings per share barely constitutes 5% of the intrinsic value of any company. So what about the remaining 95%? The P ratio does not capture any of that. So investing is both an art and a science, and nuanced judgment is required. There's a lot more to making money in the market than just looking at P ratios. And in order to understand how to correctly interpret and arrive at the justified P ratio for any business, everyone should read two white papers, which I've talked about in my book as well. The first white paper is by Michael Mauboussin, titled "What Does the Price to Earning Multiple Mean?" And the second white paper is by Epoch Investment Partners. It's titled "The P Ratio: A User's Manual." So everyone should read these two white papers. You'll get complete knowledge about how to arrive at the justified price to earning multiple for any business, because the P ratio for any business is primarily driven by two key variables: growth and return on invested capital. And these two white papers will explain to you how the interplay of these two factors drives the P ratio.
Yeah, that's something that it's very, very PE ratios and just your ability to capture value in some of these investments when, I mean, do you have to be a professional investor? Like, I guess, what does it take to be, do you just need the experience? Do you need to be in some bad deals? Do you need to just read some books like this one? How do you get to a point where you're able to take all these factors in consideration to make good decisions in the market?
The answer is very simple, Max. I'll give you with examples. If you want to become a good lawyer, what do you need to do? Study and practice. If you want to become a good doctor, what do you need to do? Study and practice. Similarly, if you want to be a good investor in the stock market or in the crypto market, what do you have to do? Study and practice. There is no alternative to hard work. And the biggest risk is when you are trying to do something which you don't understand just because others are making quick money in that particular activity. Don't fall to FOMO or fear of missing out. Just be disciplined. And what I've realized over the last 15 years of investing is that if one just avoids stupidity, the way capitalism works is the odds are so rigged in your favor that you cannot help but become rich over time. You just have to avoid standard stupidities, which and as you know, human beings are a messy living compilation of a multitude of behavioral biases, especially in matters of when it comes to matters related to money. So just avoid, all the standard stupidities like Charlie Munger says, and you'll do very, very well because you can't help but become rich over time if you spend less than what you earn and invest the difference and just let it compound over time.
I love that. I love it. Yeah, it reminds me of Warren Buffett, Charlie Munger. Charlie Munger saying, "I only want to know where I'm going to die, and I'll never go there." Yeah, I want to. I don't need to make good decisions all the time. I just need to avoid bad ones. I think that's so true. I want to ask you too, while wrapping up. Fantastic conversation so far. Really, really appreciate you coming on. Our community, of course, you may have noticed, is into not only compounding and delayed gratification, but in the niche of crypto and all of the exciting things that comes with it in DeFi, decentralized finance. What do you think about the rise of cryptocurrency and decentralized finance? Do you think it's a revolution? Will it stay a niche market for some time longer? It'll become nothing, or it'll become something significant in the next 5 to 10 years?
See, Max, I'm a big believer in the benefits of the underlying blockchain technology and its future. I think it's got a very bright future. I don't understand cryptocurrencies very well because they don't generate free cash flow. But I think the crypto world is a great place if you can be a trader with good risk management in place. I think it's a great place for trading because the level of volatility which you get in the crypto market I think it's a great place for people who can trade very well and who can follow proper appropriate risk management. And here I would also like to add one more important point, that when you have got so many of the world's smartest minds backing something like blockchain and cryptos, this, as we all know, some of the best minds in the world are backing this field. It is not a wise thing to bet against it. And history again teaches us that whenever any new asset class is introduced or a new technology is introduced, it takes a lot of time for it to become mainstream. In the initial years, you'll have many naysayers writing it off, and you'll have a lot of scams, frauds coming out, some disruptions happening now and then, like we saw with FTX and other exchanges. But this is all part of the cleansing process before crypto eventually becomes mainstream. So I would not bet against a field in which so many smart minds are basically investing so much time and effort. So even though some value investors are calling for a ban on cryptocurrency, I would rather be open and flexible and not write off anything at all. If there's one more thing which I've learned from the last 15 years of investing experiences, just be open-minded to all and diverse points of view. Just don't have very rigid viewpoints. Always be open to listening from and learning from others as well about what they're doing, because there may well be merit in what they're doing. It is just that you don't understand what the underlying merit or demerit is. So the three most difficult words for all the highly educated minds on Wall Street to say is "I don't know." But trust me, that is the most liberating thing to do, because if you don't know, just say it. I don't know, instead of just giving your half-baked opinions and just to hold on to some rigid philosophy and to appear intelligent. That is not the way to be rational, in my view.
Right. Yeah. Well, we had a couple questions around just DeFi and I'm trying to frame it in a way that would be good to talk about. But for example, have you ever evaluated or seen products that have parallels to traditional finance, such as one of the products that this community is involved in is called Hex Crypto, and it's like a blockchain CD, that kind of parallel. You lock up money for a period of time, just like you do a real CD, and you get paid a percentage of interest, and longer pays better. Longer you lock it up, the more you get, the bigger it is. Just a lot of the same similar rules as in the traditional finance. Have you evaluated or are interested in any products that would have those parallels that, or what advantages they may have as far as in the digital world and cryptocurrency versus traditional finance?
Unfortunately, I have not dedicated a serious amount of time to evaluating various options within the crypto space. So I think you're the expert in this, Max. You would be better able to answer these questions on cryptos.
Yeah. I always like to talk to people, in the finance world about this, because I just think, and like you said, people betting against it. It's hard to bet against something that has a lot of big brains in the field. And then of course, people are incentivized to make money, right? If they see a market that they can start from the ground floor and get in early, just like you do Coca-Cola, if you bought it 100 years ago, and just held on to it, it'll keep compounding, right? So I think the incentives are there for people to look at crypto from traditional finance. And I keep seeing these different products pop up that kind of have a lot of parallels. And of course, with us, that's the one that's kept us in the game. You can lock your coins up for 10, 15 years even. So a lot of people are heavily incentivized to help this ecosystem grow, and for that to pay off eventually after they delay gratification, of course. So
sounds very interesting. I will read up on it. Sounds very interesting. Thank you.
Yeah, of course. Any other questions from the chat? There was a few about, I tried to kind of combine them, a couple there, but if we have any other questions, I'll take them. Otherwise we'll call the stream. Don't see anything in here. Yeah, I think just people are just curious about of course, a lot of people in the chat some may be from, from your world as well, but a lot of them are from the DeFi world, and they're so curious about, what the big names in finance think about this digital kind of way to make money now and earn yield, and even passive income. A lot of people have been using it for that. So I don't think we have any more questions though. I guess I'll give you the final words. What have you maybe we'll think about 2023. What is your outlook for markets in general 2023? Any secrets you can share, or ways to think about the world as we start this new year?
Just try to be as rational as possible, and just we try to be as realistic as possible. Some investors say that only optimists make money. In my view, only the realists make money, and the great investors are active seekers of truth. So just accept and embrace reality for what it is, not what you want it to be, or hope for it to be, or wish for it to be. So just go with the flow, and just accept reality as it unfolds, and make rational decisions. And if you just do that, if you just align yourself with the tide, you basically do very well. As I said in the beginning of the interview, just try to be directionally correct, and try to be in line with the flow of the world, where the world is going. And who knows, the world of blockchain and cryptos may be where the world is going in the future. Who knows? So I would like to start studying this field as soon as possible, just to have a basic understanding of how of the various alternatives and investment opportunities in this asset class. I mean, some of the biggest riches and wealth are often made in all these nascent technologies, and that is what history has taught us. So I think everyone should just keep educating themselves, and not have a closed mind to any nascent technology or asset class.
For sure. Yeah. And you know where to go if you have any questions about some of these products that we're interested in. DeFi, of course, we've got a ton of big brain people in our community that all they do is they create content, whether it's blog, whether it's social media, of course on Twitter and on YouTube, tons of just lots of good DeFi products that how to wrap your head around this stuff. So of course, let us know if you need any information on everything. And thanks again, everyone. If you're interested in wealth creation and just principles for life and understanding compounding, I know our ecosystem is just full of people who love delayed gratification. They love these healthy principles to help you become a better person, a better investor, and just really, eventually achieve financial freedom. And once you do, then, once you, again, the vol quotes keep coming to mind, get rich first and then figure out what you want to do. Like, it may not be the same thing after you get there. So again, thank you very much for joining us, Gautam. Been an absolute pleasure. Glad to have you on the show. Where can people find you? Do you have a website or Twitter or YouTube or anything like that we can share?
Sure. People can connect with me on Twitter and LinkedIn. And for more information about the book, they can visit thejoysofcompounding.com. And for more information about my India fund in the US, they can visit stellarwealthindia.com.
Okay. I'll throw your Twitter up there as well. Gautam Baid. Perfect. Again, thank you so much for coming on the show. It's been an absolute pleasure. Everyone, if you have any questions, reach out to Gautam on Twitter. Leave a comment asking, and I'll try to let them know we have people that have other questions on the book or otherwise. If you're interested in wealth creation, again, check out the book, The Joys of Compounding, one of my personal favorites. And with that, we'll say goodbye until I'll be streaming tomorrow. I'll be streaming a lot this week, so everyone tune in. Got a lot of streams, a lot of good stuff coming up. I'm glad we could get Gautam in today and really have this conversation. It's immensely valuable.
Thank you, Max.
Yeah. Thanks, everyone.